What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 60 free stocks, Mumu is going to give you up to 60 free stocks when you open a new Mumu brokerage account. Get yourself down to the first link in the description box, the Mumu link. It has all the details. Click on it, open up that Mumu account, make your deposit, get yourself some free stocks. Listen, man, today was a little bit dicey in the stock market. Started off a little bit shaky, but I must say it was resilient. It actually ended the day in the positive. Here's the headline. S&P 500 inks out sixth winning day as investors look past U.S. credit downgrade. The benchmark added 0.09% and closed at 5,963 points. All-time high, mid-February 2025, was 6,147 points. So trying to get back to that all-time high, man, we'll have to see. While the NASDAQ inched up 0.2% to end at 19,215 points. Trying to get back to that 20,000 points, guys. The Dow Jones Industrial Average rose 137 points or 0.32%. and settled at 42,792 points, way off of the 45,000 points we hit in mid-February 2025, but starting to get back up there though. The 30 stock index was aided by a rebound of United Health. Remember last week, tail end of last week, United Health had a slide in its stock price. Started the recovery today, which saw an 8% jump after a recent bout of hard selling. Treasury yields spiked after Moody's lowered the U.S. credit rating down one notch to AA1 from AAA, bringing the agency in line with peers. The firm cited financing challenges tied to the federal government's growing budget deficit and the ramifications of rolling over existing U.S. debt in a period of high borrowing costs. We have about $6 trillion worth of debt coming due, I believe in June or July. And with prevailing rates today, we're going to have to roll that debt over at a higher interest rate. That's one of the reasons why 47 is so hard on Federal Reserve Chairman Jerome Powell to reduce rates. But unfortunately, right now, it's looking like we're going to have to roll that debt over at a higher interest rate unless something happens with interest rates over this next couple of weeks, June, right? July, if we get interest rates to come down. Not looking that great right now with Moody's and basically Standard & Poor's and Fitch, typically your three major credit rating agencies, all downgrading us one notch, right? Not looking good for America when it comes to our credit rating. The debt downgrade pressured bond prices and sent yields higher at a time when the economy is already awaiting the full impact of 47 unfolding tariff policy. At their session highs, the 30-year U.S. bond yield jumped above 5% on Monday, which is not where you want it to jump to, right? And the 10-year Treasury topped 4.5%, levels that hurt equity markets last month and helped lead 47 to back off his stiffest tariff measures. Rates on mortgages track the 10-year Treasury yield. So as the 10-year Treasury yield goes up, guess what happens to your 30-year fixed rate mortgage rates? They go up. So you really don't want the 10-year Treasury going to 4.5, 5, because that's just going to run up 30-year fixed rate mortgages. And we're already having enough problems in the housing market without rates continuing to go up. So not good as well. The Moody's report didn't highlight anything that every investor doesn't already know about U.S. fiscal situation. This is coming from investment analysts at Bird. To me, it just kind of provided a little bit of cover for the market to take a breather here, right? But nothing that structurally changes our bullishness on where we think we'll be in the next 6 to 12 months. Traders now see more trade deals as key to keeping the stock market comeback going if higher yields don't scare away investors first. So there you go in a nutshell, man, what happened today, right? Pre-market, everything was nosediving. Market opens, things kind of was flat. You had a slight nosedive, and then things started to turn around. And by the end of the day, 4 p.m. Eastern time, we're back at what? The green, right? Because investors already knew what Moody's downgrade would mean to our debt. They already knew this. Basically, they were not shocked by the downgrade is what I'm saying. JP Morgan's CEO, Jamie Dimon, on Monday called the market too complacent on the issue of 47's tariffs. Here's what he said, quote, "My own view is people feel pretty good because you haven't seen effective rates yet," Dimon said at the bank's annual investor day in New York. The market came down 10%, back up 10%. That's an extraordinary amount of complacency. This is coming from the CEO of America's largest bank, 5th largest bank in the world. Additionally, Dimon discussed the risk of stagflation and the U.S. budget deficit, among other topics. The banking executive also said S&P 500 earnings growth could fall. JP Morgan shares ticked down nearly 1% in afternoon trading. So Jamie Dimon is basically saying, listen, guys, we ain't really even felt the full impact of these tariffs yet, but he believes it's coming. I would tell all of you guys, get your financial house in order. Get yourself in a position where you got some money tucked away. You got your emergency fund together. You're living on less than what you make, right? You're doing everything you can every day to get out of consumer debt and get lean and mean, man, because I'm telling you, if these tariffs persist, it's not going to be pretty. You've already had probably the world's largest retailer, Walmart, CEO, already come out and said, listen, guys, get ready for price increases this summer and during the back to school season. That's what the CEO of the world's largest retailer said about price increases. Now, of course, 47 went after him or went after Walmart. But at the end of the day, guys, Walmart is telling you the truth. Tariffs are paid for by the consumer. This is what Walmart is telling you. Walmart is saying, hey, we can only do so much. We already got razor thin retail margins. Even though they do billions and billions and billions and billions of dollars a year in revenue, I think they do over 600 billion in revenue. They're saying they got laser thin margins. So if they eat the tariff costs, they ain't gonna make no money. That's what Walmart is basically saying. So get yourself in position, man. I just wanted to give you a quick recap on the market today and what was happening. Like I said, the sticker shock on Friday when Moody's came out with the credit rating downgrade, but at the end of the day, investors already had priced that in, so it wasn't a big deal. We saw that in the market today. No real deep sell-off, little baby one, and then boom, before the market closed, it recovered. And then you got Jamie Dimon coming out saying, hey man, y'all better get prepared. Drop me some comments and let me know what you think about what's happening right now in the economy, in the stock market, in the labor market, in the housing market. What do you guys think is gonna happen over these next 6 months? Do you believe we're gonna go to the moon, or do you believe we're gonna just implode? Love to get your feedback. If you want up to 60 free stocks, Mumu is gonna give you up to 60 free stocks when you open a new Mumu brokerage account. Get yourself down to the first link in the description box, the Mumu link. It has all the details. Click on it, open up that Mumu account, make your deposit, get yourself some free stocks. www.richardfain.net is the website address. I got 10 big boy blue chip digital products that will change your life. Go check them out. Second link down in the description box. While you're in my website, consider joining the fastest growing financial community on Patreon. We're called the Wealth Builders. We got over 2,000 wealth builders in our financial community. All we do in that community is help each other build wealth. Matter of fact, we got a live stream tonight, a private live stream at 8 p.m. Eastern time. All wealth builders are welcome. If you want to be a wealth builder, all you got to do inside of the website is click on the join button, the membership button. It'll take you over to Patreon. Sign up for the wealth builders and come join us tonight for that 8 p.m. Eastern time private live stream where we're going to be talking about all of these topics and sharing best practices, golden nuggets, tips, what's working, what's not working. Nothing like a community of people headed in one direction, which is financial freedom. We'd love for you to join us. So come join us. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.